At this time. All right. Well, thank you for taking the time to join us today. We're going to talk a little bit about economic relief in regards to both the PPP program and the employee retention credit. My name is Kristen Labby, and I sit here in our Lakeland office. And joining me today is Jason Correa, and he's going to be talking about PPP with us. And so with that, like I said, we're going to use the chat function since everyone's muted. You can type your questions in there, and at the end of the presentation, we'll make sure and address as many of those as we can. So, all right, Jason, you want to take it away?
Sounds good. Thanks, Kristen. Yeah, so thanks everybody for joining us this morning. As Kristen said, I'm a principal. I'm up in the Northeast, so I wish I was down where it's nice and warm with the rest of you. No more snow up here as of right now, but still a little chilly. So I'm going to go through an update on the PPP, which has been consistently changing. Like Kristen said, as we go through any questions, just feel free to throw them in the chat function. Hopefully we'll address as many of them as possible throughout the presentation, and then we can circle back at the end and answer any other questions. So this is just kind of a general disclaimer that, as I said, the PPP is constantly changing. This is everything I'm going to talk about is based on the latest guidance that has come out through yesterday. But again, just to say that things are still constantly evolving with the SBA, and so just really to stay up to date, use the Treasury website so you're just staying up to date on any additional changes that come through Congress. All right, so I thought the best place to start was really just to reiterate that we are still talking about two distinct PPP programs. So for most people, most of our clients have really been focused on the second draw of PPP money that became available. But I did just want to reiterate that the original PPP program did also get extended. And actually the original date that both programs were set to expire is March 31st. There's actually a bill that's been passed through the House and is with the Senate right now that would extend that deadline to May 31st and give the SBA up until June 30th of 2021 to guarantee and approve loans. So stay tuned on that. Hopefully we'll have answers on that in the next few days. But as I said, if you for some reason did not receive a first round of PPP money, you can still apply for a loan. So that really came into play for a lot of entities that became newly eligible for a PPP loan, which we'll talk about on the next slide. But if for some reason, you're a borrower that didn't apply previously because, for whatever reason you didn't think you needed it, or you do still have the ability to apply for a loan. And that's important to point out because obviously in order to get a second draw loan, one of the key criteria is you need to have received a first draw PPP loan and have spent that money. So, looking at kind of, who's eligible from an entity type perspective, if you were eligible for a first round of PPP money, you're still eligible based on your entity. I think the major changes that came out were some nonprofit entities, specifically 501c6 entities that were previously ineligible are now eligible. So again, you would have to apply for a first round of PPP money before you could apply for a second draw loan, obviously, but those entities are now eligible, along with some marketing organizations, some news organizations, some housing co-ops that previously weren't eligible for a PPP loan. So really the key requirements, again, if you're applying for that first draw of money, the cap in terms of number of employees is 500 employees. There are some alternative sizing standards depending on the type of entity. If you're a franchise, or if you fall into NIACS code 72, for restaurants and hospitality, the number of employees is measured differently because you can look at it by location of the franchise, as opposed to having to kind of aggregate all employees. and there is a lower limit for some of those nonprofit entities and newly eligible entities. On the second draw, it's important to point out that employee limit goes down from 500 to 300, and the same affiliation rules still apply. In terms of if you're a franchise, you can look at it by individual location. If you're not, you have to combine all affiliated entities. So assuming that you have 300 or less employees, I'd say really the key criteria for that second draw loan, which is really the new factor and limits a lot of the borrower population, is this concept that you need to have at least a 25% decrease in your revenue. And the way that that's measured is by looking at your gross receipts by quarter of 2020 and comparing it to the same quarter of 2019. And the guidance has made it clear, technically you only need to have that reduction in one quarter. So you don't need to have a 25% reduction across the board. As long as in one quarter your gross receipts were down by at least 25%, you will qualify and be eligible for a second draw loan. I guess the one point I would make, just caveat to that, is similar to the first draw of PPP funding, you're still going to have to certify that you have an economic need for the loan. So there have been a lot of discussions around that, and actually some FAQs that came out last week. And the SBA has basically said if you meet the 25% reduction, and again, because loans on the second draw are capped at $2 million, you will technically be part of that safe harbor where you will be assumed to have made in good faith the certification that you have an economic need. But it's important to look at that and make sure that when you apply for the loan, you really can certify that in good faith. We have a lot of companies that may have had a reduction of 25% in the second quarter of 2020 compared to 2019 when COVID first hit, but that rebounded really well and ended up having very strong years. So again, you just need to make sure that that you don't think there's going to be any major issue or risk there with saying that you actually had a need for the loan. So again, talking about the sizing, if you're a first-time borrower, and really if you're applying for a second round of PPP loan, it's very similar calculation in terms of if you come up with your average monthly payroll, that includes wages, it includes your insurance and benefits, and you take 2.5 months of those average monthly costs to come up with your loan size. So again, for the first round of funds, that maximum loan amount is $10 million. The cap for affiliated entities combined is $20 million. Now on the second draw of PPP money, that cap has been lowered to $2 million per loan. So that's the maximum you can receive. So on an affiliated basis, if you do have multiple entities that are affiliated, the most that you can receive is $4 million. Now, one key thing to point out is if you are an entity that's part of that NAICS code 72, so again, restaurants, hospitality, you can actually take 3.5 months of your average monthly payroll costs. So those entities are eligible for a higher loan amount. Again, still the same $2 million cap, but you get the benefit of an extra month's worth of average payroll costs to apply for that loan. So just a few key considerations. We've had a lot of clients who have had their application or approval of the application by the SBA delayed. It's been a slow process for a lot of them. Couple things that could cause it, or a couple things to keep in mind. In a couple of very unique situations, you can actually apply for an increase in your original PPP 1 loan. So we had some clients that may have returned some funds. Some clients that may, again, have not been eligible originally. There are very specific circumstances, but you may have the ability to apply for an incremental increase in your first draw of funds. Some concerns that have caused delays on processing of the second round of applications is if your original loan, if you've applied for forgiveness and the SBA is in the process of actually reviewing or kind of auditing that forgiveness, that may put a temporary hold on your second draw application. Or again, if there's any sort of information that indicates that you weren't actually eligible for your first loan, or that you received the incorrect loan dollar amount, that may create an issue with processing your second loan application. So if you're in that process, if you're receiving delays, one thing that we've suggested is the banks can actually reach out and look up to see if there are any hold codes that have been placed on your loan. And usually that'll help kind of flag what the issue is so that the bank can help you resolve it. So some modifications that were made as part of the CARES Act, as part of the Economic Relief Act that was signed just before the end of 2020, in addition to creating the second round of PPP funds that are available, they also modified the categories in terms of what eligible costs can be used. And this applies for both PPP, both the first round of funding, if you haven't applied for forgiveness yet, and how you can spend the dollars on the second draw of funding. So some of the expanded categories include, operational expenditures, which is a pretty vague category, but it includes things like payroll processing fees, that you pay to ADP or Paychex. It includes some software and cloud computing costs. There's also a category for covered supplier costs, which is also a pretty broad category, but really it's defined as any critical costs or expenses to run your business, which again can be pretty broad. As long as you had an agreement or kind of purchase order in place with that vendor prior to February 15th of 2020, you may be able to include those key supplier costs. Worker protection expenditures. So again, if you had to buy PPE for your employees, or make any modifications to the building to improve airflow, and make modifications so that you could, for instance, if you're a restaurant, be able to handle takeout more easily. Those expenditures would be eligible now. If you had any property damage costs that weren't covered by insurance, from vandalism or looting, you'd be able to include those costs as well. And then the last thing is they did clarify that the insurance costs that can be included go beyond just health and dental, and you can include group life, disability, and vision health benefits that you're paying to your employees. Again, that's the employer portion of those benefits. A few other modifications that really were clarified in the last few months is that as a borrower, you can select any date in between 8 and 24 weeks. So those are the two standard, covered period options. But the SBA has clarified that it doesn't have to be either or. You could pick really any date between that range as the end of your covered period, and that'll be the period that you use to measure your FTE calculation as well. They did provide some additional guidance around seasonal employers. Again, as I mentioned, some specific situations where you can apply for an increase in your original PPP loan. And one of those is if you're a partnership and you originally excluded draws that are made to the partners, that can actually be included now. Again, PPP funds can't be used for lobbying activities. That was clarified. They did remove the deduction for the EIDL advance. So I know a lot of businesses applied for and received up to that $10,000 EIDL advance. Under the original guidance, you had to back that out of your PPP forgiveness, and that's been removed. So you no longer have to repay that portion when you factor in your forgiveness on the PPP loan. Just wanted to quickly kind of go over the actual forgiveness process in terms of applying, and just clarify that there are 3 separate applications. I know this part of the process can get a little intimidating, especially when you're dealing with the banks, but there are 3 separate forms. So you kind of have the full form, the 3508. You have an easy version, which you may be eligible to use if you're self-employed and don't have employees. If you did not have any reduction in your headcount in terms of full-time employees, full-time equivalents, and did not reduce anybody's hourly wage or salary by more than 25%. Or the other possible scenario is if you were not able to operate your business at the same level of activity. If you were forced to shut down by state mandate, forced to shut down because of safety guidelines from the CDC, you could utilize easy form and rely on the safe harbor to say that your business was significantly impacted by COVID. And then the other key point is if you have a small loan, which the SBA has classified as anything under $150,000, they've actually released a simplified form called the 3508S, which is the equivalent of almost a one-page certification. It's much more streamlined. You actually don't need to provide any supporting documentation to the bank when you apply for forgiveness because your loan is under that dollar amount. You do need to maintain it within your file in case the SBA wants to come back and look at your loan. They have a 4-year review period on those loans, but it is a much simpler process in terms of going for forgiveness. So in terms of timing, and this is a question we've been getting more and more lately, you do have 10 months to apply for forgiveness, and that's from the end of the covered period. And there's been some confusion about that because, again, you can elect a covered period that's anywhere between 8 and 24 weeks. The clarification we've gotten from the SBA is that 10-month clock starts from the end of the 24-week covered period. Regardless of if you elect a shorter covered period, it begins at the end of that 24-week window. So I know I've had some clients that have actually had their bank reach out to them over the last couple of days, letting them know that that interest payments are going to start to be due on the loans, and it's been incorrect. So just something to keep in mind. In some instances, you might have to remind your bank of that fact, but you do have 10 months to apply for forgiveness from the end of that 24-week period. So for most businesses, you probably need to apply for forgiveness somewhere between June and August of 2021. And other factors to consider just as you're thinking about applying for forgiveness are just timing of things like if you're making distributions to the owners, if you have to comply with your loan covenants for the bank, if you're trying to manage your personnel and your workforce, because again, especially if you're an entity that got a loan over $2 million, there will be a lot of questions on the need questionnaire that center around some of those changes in your business. And depending on what your covered period is and and when you apply for forgiveness, just important to consider those things from a timing standpoint. And I'd say the other critical one is if you're planning on making any change in ownership, whether you're looking to sell the business or sell a portion of it, that also comes into play because depending on the structure of that transaction, you may actually need to get approval from the SBA prior to completing the transaction.
All right. Thanks, Jason.
Yeah, no problem.
All right. So I'm going to go ahead and here we go. I'm going to go ahead and talk about the employee retention credit. This is one, PPP has gotten a lot of recognition, and the employee retention credit is one that I feel like not a lot of people know about, but it's extremely beneficial in these times. So the employee retention credit time period, this is new. The employee retention credit was ending under the first guidance at the end of 2020, and it is now available to eligible employers for all 4 quarters in 2021. So that is a huge benefit to go throughout the end of the year. Also, previously, PPP borrowers were not eligible to receive this credit. That since has changed, and you are now eligible to have both. You just can't use the same payroll dollars for both. So you can't double dip on that, but I'm going to go into that in a little more detail. All right, so eligibility. I'm going to go through a couple different ways that you may be eligible. One is a shutdown. So if you had a government order, whether that be federal, state, local, if you were forced to close due to that government order, then the time period that you were shut down, you are eligible for the employee retention credit. We just want to note that it must be a government order, not some other sort of guideline impacting business operations in order to be valid. But that, like I said, could be federally, it could be state, it could be even local, if your local mayor put in some sort of order that made you shut down. Another way you could be eligible is a partial shutdown. So what does that mean? This is kind of a gray area. So the SBA has come out with some objective tests to try and help you determine what is considered a partial shutdown. And really that is looking at gross receipts. So if any portion of your business operation shut down and that operation is not less than 10% of your total gross receipts, then that could be considered a partial shutdown. You could also look at the hours of services performed by your employees. So if you had to shut down a portion that is not less than 10% of the total number of hours, then that could be considered a partial shutdown as well. And so that time period that you were shut down, you would be eligible for this employee retention credit. This is a big question that comes up. You know, a lot of businesses have moved from being physically in the office and now allowing people to telecommute. And so you really just kind of have to look when you're looking at a partial shutdown again on those hours. You know, are they able to perform their job fully from home? Or, you know, did their hours have to be cut back by more than that 10%? When they move due to, you know, whether their job requires them, you know, to actually physically be there, that they were unable to be during that partial shutdown. So that's kind of, you know, something that's going to have to be evaluated on a case-by-case basis to see, you know, if you're eligible. You also can be eligible based on your decline in your gross receipts. And so this credit, like I said, was in place in 2020 and is now extended through 2021. But the eligibility did change. In 2020, you had to have greater than a 50% reduction in your gross receipts in a calendar quarter. Same thing as PPP. It's in that calendar quarter compared to the same calendar quarter in 2019. So if any one of those quarters you had a greater than 50% reduction in gross receipts, you would be eligible during that quarter. For 2021, however, though, that is reduced, and you only have to have a 20% reduction in your gross receipts. So again, it looks at the calendar quarter in comparison to that same calendar quarter in 2019. So for quarter one of 2021, you're going to be comparing that to your 2019 quarter one. And if you had a greater than 20% reduction, then you would be eligible. Determining gross receipts. That's another big question we have. What is gross receipts? You know, gross receipts does include all your services, your sales, any investment income you had, rents, royalties. You basically follow this same accounting method that you use for your tax return or that you're using on an annual basis. So, you know, if you are doing cash basis throughout the year, then you would, you know, follow the gross receipts on that cash basis. If you're using accrual, you would follow that. And you must use the same in both quarters that you're comparing to. So no using cash basis for one and accrual for another. You have to use the same accounting method for both years. Eligibility. There is also an FTE requirement when it comes to the eligibility. For 2019, full-time equivalents, this is based on anyone that works 30 hours per week or 130 per month. For 2020, you had to have under 100 FTEs in order to be eligible. For 2021, that jumped to under 500 FTEs. Now, if you are over 100, there is a little caveat there that you can use any eligible employees that you paid while they were not providing services. So if they were not working for you, but you still paid them during that time, then they, then you can go over that 100 FTE requirement. This is just a little breakdown that kind of breaks out employee type in the different entities. As a nonprofit, all your employees are going to be eligible. As you go to being a C Corp, an S Corp, a partnership, or a single member LLC, you will see sometimes the owner can or cannot be included. On an S Corp and or C Corp, you can only use owner wages if the owner owns 50% or less of the business. As you move up to a single member LLC, any of the owner's family is not eligible to be included in this credit calculation. Affiliates, all members of a control group must look at the eligibility piece as a single employer. So you'll have to pull all those together when you're looking at especially your FTE calculation. So that's just something to keep in mind. All right, so calculation. How do we calculate this credit? Like I said before, you can now receive both PPP and the employee retention credit, but any wages used in the PPP forgiveness up to the loan amount are not eligible. So that is just something to keep in mind. You're going to want to apply PPP first to any other expenses in order to keep those wages available for the employee retention credit. So like Jason said, those covered supplier costs, your rent, your utilities, your benefits, well, I guess not so much your benefits, but all your other expenses, you're going to want to use that up on your PPP first before you dip into your wages so that you can leave any additional wages out there for the employee retention credit. So you're going to want to determine wages by quarter. Now this has to be detailed to be provided and broken down by employee. So you're going to want to, you pull that together by employee on what their wages were for their quarter. Now their wages will also include their benefits, which I'll touch on the next slide. And one important thing I wanted to point out is, when we originally shut down, it was really the last week in March of 2020. And so that 1 week can actually be included in your second quarter of 2020. So you don't have to amend both Q1 and Q2. But that is the only time period that is allowed. Qualified health plan expenses. So for the employee retention credit, you can use more than just the wages paid to your employees. You can use health plan expenses, which includes your group health, HRA, FSA, but it does not include life, disability insurance. So just something to keep in mind on expenses that can also be added in addition to your normal wages that you pay. Qualified wages. So there is a cap on the wages per employee. For 2020, you were eligible up to $10,000 per employee annually. Now 2021, that did change. The 10,000 cap is the same, but it is now per employee per quarter. So technically, with this credit, you could have 10,000 per quarter, so 40,000 for the year per employee if you're eligible in all 4 quarters. The credit amount. For 2020, the credit amount is 50% of those qualified wages and qualified health plan expenses. So up to that 10,000 amount, you could get 50% of that per employee, which would be a max of 5,000 per employee. Once again, for 2020, that's just annually. 2021, that 50% is up to 70%. So you can have 70% of that $10,000, meaning you could have a $7,000 credit per employee per quarter. So you could have a credit of up to $28,000 per employee in 2021 if you qualified under all 4 quarters. All right, so the process, what is the process for getting these credits? Step 1 is to determine your eligibility, which we talked about, to see if you're overall eligible as an organization, in regards to the type of organization, your FTE calculation. Then you're going to want to look at the periods you're eligible. So like I said, during that shutdown period, you're eligible. During that partial shutdown period, you're eligible. And then any of those quarters where you have the drop in your gross receipts, you are eligible for. Then you're going to want to look and see what employees are eligible. Like I said, in nonprofits, for instance, all your employees are going to be eligible. You just got to be careful when you move to some of those employer costs when you move from out of that nonprofit into that partnership LLC. So then you're going to calculate your eligible wages and health benefits based on that either 50 or 70% of the $10,000. And once you come up with that total, what you're going to do is you have to file a 941X, which is basically just an amended 941. That is where you actually claim the credit. Unfortunately, amended 941s cannot be electronically filed. They have to be filed by paper. And as most of us have heard, the IRS is extremely backed up in processing paper returns. I think they are still processing returns that were received last July. So I say all that because it could take you over a year, is what they're estimating, to actually physically receive the credit. But once that is processed, then the IRS will send you the refund for your employer retention tax credits. These are some resources that we have for you guys. Like I said, we're going to provide you with these slides so you can go to these links. They're great resources that we use on a daily basis. They're updated constantly with new questions, FAQs, everything you could need. So these are great resources to go to. And with that, we'll go ahead and start taking any questions that you guys have. Jason and I are both here to answer anything. We want this to be able, to help you the best we can. So you can either type your questions into the chat, or if you want to raise your hand, and speak, we can do that as well.
So it does look like one question came in while you were going through your part, Kristen, on the ERC. So Melanie asked if they were to apply in 2021, would they use their gross receipts from 2020 or 2019?
So if you're going to apply in 2021, like I said, you're going to be using the quarter that for 2021 compared to that same quarter in 2019. So if you're doing Q1, you would be looking at your 2021 quarter one gross receipts compared to your quarter one 2019 gross receipts. Same thing, if for quarter two 2021, you'll be looking at quarter two 2021 gross receipts compared to 2019. All right. Anybody else have any questions? Both our contact information is here, so you can definitely reach out to us after this presentation if you have any other questions or need assistance working through any of these forms or any of these calculations. We'll be happy to assist. This is best done by our tax preparer. Melanie, do you mean, I'm assuming you have maybe a payroll company that's doing your 941s, is that correct? We are seeing a lot of companies that will do it for you. If not, like I said, you can do this on your own, or you can reach out to us. We can assist you. It really just depends on your payroll provider. I've worked with some that are doing them, and other ones are saying, no, you're kind of on your own. So it's kind of on a case-by-case basis. I do know that with your payroll provider, most of them, they will not do the calculation for you. So they'll say, okay, tell us what your credit is, and then we can amend it for you, but they will not actually help in determining the amount of that credit or determining your eligibility and the actual amount. So that's something to keep in mind. Yes, Corey, we definitely encourage you guys to share this with your members. Like I said, especially when it comes to employee retention credit, not a lot of people know about it. And it is significant. Like I said, I mean, up to $7,000 per employee for 2021 per quarter can really be significant for some of these small businesses. So definitely something to keep in mind and share. All right, well, Jason and I will stay on for a few more minutes in case anyone has any additional questions. But if not, thank you for joining us today. We hope that it helped you in some way and that you can benefit from these different programs out there. Like I said, we will send out the recording as well as the slides so that you can have them for reference. And please feel free to reach out to either one of us at any time.
Yep. Thanks, everybody.